Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody, and welcome back to another live stream here on the A1 Trading channel, or the A1 Trading Show, or my YouTube channel, Trader Nick. I'm here joined with, of course, the co-host here, James. How's it going, James?
Good. How are you, Nick?
Good. Looking less and less sunburnt. I know you were at the beach recently, so
these lights in here, we have these nice color changing lights, gives the room a nice kind of ambiance. We're here, we're chilling, we're having a good time, but every time it's on like a reddish filter. So this is white, not so bad, and then it goes to red, and I'm like a tomato.
Turn into a lobster for just a second there. No, it's all good. Sunburns are no fun, but better and better each day.
Recovering.
James,
Recovering.
we've got a lot of news that came out this morning. Have you had a chance to look at any of that?
I did. A lot of PMI news happened today. We had the Euro area PMI that includes French and German flash manufacturing and flash service PMI, as well as just the Euro in general right there. Pound, UK, flash service and flash manufacturing, as well as US, which is happening here in roughly 10 minutes, just over 10 minutes, and Canadian retail sales as well. But something I found interesting, and I'm not sure what causes this. You may have an answer for this. This may be a crazy coincidence, but manufacturing in all of these boxes that you look at, manufacturing came out lower than expected and services came out higher than expected. And I just thought that was maybe an interesting coincidence, or maybe there was something underlying causing that to happen.
Now that's a good observation for sure, because you can see it's in terms of just the pattern. It seems like all three were very similar, and it would make sense in some cases, James. And if you think about globally, geography-wise, these places are all similar in nature. Of course, when you're talking about German numbers and French numbers, hey, they're neighbors. So in some ways, their economies, especially both being part of the European Union, a lot of their numbers are going to look very, very similar. And then the UK, of course, just across the pond there, they are going to have some correlation in that regards as well. But yes, it's kind of an interesting one to see. Like you said, manufacturing PMI disappointing across the board, but services across the board looking good. And just to add a little bit of clarity to this, let's talk about flash services PMI for a second. Angeline, by the way, in the chat, I'm on my way as we speak to Georgia, 9-hour drive for me for Virginia. So excited though. Angeline, I can't wait to meet you, and hopefully you'll get a chance to have a conversation with myself and the rest of our team. We're super excited for our event tomorrow. That is going to be so fun. You get to meet James, you get to meet the crew, meet myself. It'll be a lot of fun. So can't wait to see everybody who's going to be there. Also, so just diving in for a second, James, on this, we had, like you said, a lot of PMI numbers coming out. First of all, what is PMI? It's the level, it is the level of diffusion index based on surveyed purchasing managers in the services industry, if you're talking services, and of course, manufacturing, both of them key components to economies. I like this little tab where it says why traders care. It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insights into the company's view of the economy, right? Because if you're a business, it makes sense that you would have sort of all your costs in front of you. You can see economic trends in some cases before even the broader market can. So this is why we care about PMI, especially if you're talking about, for example, like Amazon or FedEx is a big one here in the United States. These companies have eyes on e-commerce, they have eyes on shipping and handling and all that stuff. And that can be, of course, an economic telltale sign. So thank you, James, for, of course, coming on with the news. As always, James, I added a little tag underneath my...
See that? I like it. I wish I had a tag.
I think yours should be Producer Grand Wizard. That would be awesome.
Grand Wizard, way too red in the face right now.
Producer Lobster Grand Wizard.
Producer Lobster Grand Wizard. Really quickly, I want to shout out Jason, too, down here in the comments. Jason is on his way as well.
Yes, sir.
Excited to see you guys tomorrow. Really excited for this. And really quickly, if I may, I made an announcement this morning on the social medias. I'm going to give the social medias just a really quick little shout out. If you follow us on Instagram and Twitter right here, you can follow us at A1 Trading on Instagram and Twitter, A1 Trading _. Our 40% off sale for the anniversary of the Edge Finder is ending in just a couple of days. You can see right here, Instagram as well. We got a lot of fun stuff that we announce, as well as news recaps and other footage. Sometimes we do chart analysis. We do all kinds of fun stuff on social media. So be sure to follow us on Instagram and on Twitter at A1 Trading. To get updates like this, because our 40% off sale, the biggest sale that we do all year, this is a one-time thing, because this is the only first anniversary of the Edge Finder. There will not be a first anniversary of the Edge Finder next year. So the 40% off sale is ending in just a few more days. So if you haven't had a chance to check it out, go check it out right now because it would be super beneficial to you in your trading journey. Maybe Chandler could drop that link. There it is. He beat me to it. But yeah, with that, I'll leave you to it.
Awesome. Yeah, thank you, James, as always, for the update on the channel here, and we'll see you back next time. Looking now, turning attention to, of course, some of the euro pairs as well as the pound pairs today, sort of in focus in terms of the Forex world. We'll also be taking a look at indices and gold as well in just a moment here, especially coming into the news, guys. We do have our, in terms of, let me make sure I'm going to bring back my Forex factory here as we step into the news. We have our own PMIs, manufacturing and services. What a day, right? In terms of PMI, we're getting some economic activity signals here this morning, which will, of course, have heavy impact on currencies as well as the broader stock market as it watches for signs of potential recession. Anyways, if you're a gold bull out there, guys, today, gold didn't actually react very bullish to this. Why is this? Well, you could make the case for, in some cases, some stronger than expected numbers. Now, of course, these numbers came out 3:15 a.m., 3:30 a.m., 4:30 a.m. Now, of course, those are several hours back. And you can see, of course, during that time, the gold market sold off. Why would this make sense? Well, economic growth is generally not actually bullish for gold because, again, it shows if there's economic strength, it generally is going to be perceived as, in some cases, bearish for gold. Gold rallies when markets are fearful of recessions and economic problems and things like that. So we'll continue to closely watch this, and we'll come back to the gold market in just a moment here. So if I'm looking at the euro, right? Euro had a pretty good pop here, and I've still got my chart marked up from yesterday, guys. We're looking at the euro dollar trading now above 1.098. And if this thing is able to break and stay above, I think there may be some continuation plays, again, off of this euro number coming out this morning. Same with the UK. And again, we're going to have to watch this carefully because, of course, we have the dollar idea coming out in just 5 minutes here. In 5 minutes, we'll get the dollar side of the coin as we do have, again, PMI numbers for manufacturing and services coming out this morning for the channel. So Aaron says, hi, Nick. I just want to say thank you. Started with your channel back in the end of 2019 and learned the ugly truth about trading and not the mainstream BS. Now I'm consistent and funded for a year now. Aaron, shout out to you and shout out to everybody out there working hard. If you're here with us every day, this stuff is not easy. I mean, look at me. Does it look like I'm sitting on the beach drinking a margarita? It would be nice, but no, I'm not. I'm in an office. We are professional about this stuff. We're trying to put on the best show we can. But of course, also being a trader means a lot of work. There's no beaches in sight right now. I wish there was, but right now we're working. Trading is working. And if you think it's anything less, you're in the wrong industry. It is a lure, right? There's like the lure of trading. It's like, oh, it's going to be this, passive, easy way to make money. It's so not. It's hard. Anyways, 4 more minutes, guys. We've got the news coming out for PMI numbers here in the United States. We got services and manufacturing reporting, which could be very volatile. I love this new little trade Forex Factory countdown. It's very cool, showing how close we are to the news. Now taking a look at gold here. Takes on gold here this morning. I'm not necessarily, we still have very stubborn inflation. Inflation is still high, and we know that a high environment for gold, inflation environment for gold tends to be somewhat of a bullish thing. Frank and I are doing a study, and we may or may not see Frank on the show today. Frank and I were doing a study, and I've got to ask him when he gets on here, so maybe we'll wait for him. We're doing a study on gold historically and its correlation to inflation. Been studying it very, very closely this morning. We spent like an hour together just talking about it. So we're still in a very high inflation environment, which still, in my view, lends towards more upside for gold. What I'm watching, for those of you guys who are also keen on the gold price, I'm watching for a breakout. If we get a break back the other direction, I'll be looking for continuations. My high my target here, for those of you who are also watching gold,
I'm looking for a return back to the previous high around 2050, which was a huge level of resistance previously. But then bigger picture, I think we take out those highs, and I think we continue back to the all-time highs, which you can't see it on this chart. 2070 is about the all-time high, give or take, that we saw during the 2020 melt up on gold, but then also we saw it retested during the Russia invasion of Ukraine. So yeah. Nick just being humble off stream, you rolling with supercars and chilling on the beach. I'm going to be very honest with you. I don't really like supercars. That sounds like such a cop out, but I really don't love them personally. Now a nice house, hey, I get on board with that. I'm not a big car person. Anyways, it is absolutely work. I mean, you got it from our end, you know, there's a 8-hour workday on what you guys see on my channel. I am by no means taking it easy. Is EURUSD done? You know, hey, that's a good question. I think we are going to have to wait. I'm going to give you guys a more solid answer on the euro in just a moment, as we've got PMI numbers coming out for the US in 1 minute. Let's set that up, and we'll get our screens going so that we can keep an eye on this release. Transparency, I'm long S&P 500 going into this release. We'll see how this impacts my trade, and I'll try and give you guys that coverage as soon as I have it for you. We've got 1 minute to go, guys. We're watching. I've got the S&P in the bottom left. We'll keep the euro top right. I'm gonna put 15-minute charts. I like to do the 15-minute charts. I think they make potential spikes more interesting. Of course, we had UK and Europe inflation. PMI numbers come out this morning. We are now heavily waiting to see what happens with the dollar side of things. And we're coming into the news here, guys. In just about 30 seconds, we're going to have PMI numbers, and I'm going to give you guys my take on things as soon as we have the numbers. And we're going to watch that together, of course. Of course, I don't trade the spike. I'm a fundamental trader, so I'm waiting to see what the numbers tell us, and then I'm going to look to trade off of that. That's how we do it each day here on the stream. About 5 seconds here, guys. Smash the thumbs up. Let's see what the market does here for us, if anything, for PMI. Numbers out. Euro, initial spike to the downside. Gold pushing back down. S&P flat here so far. Euro, not a huge move. PMI numbers, again, hitting the floor. We got 15 pips. That's something. We're seeing a reaction here. Pound USD dropping, a little dollar strength coming in, possibly some stronger than expected economic numbers. I haven't looked at them, but I'm going to assume the S&P 500 holding shows potential resilience in the face of a recession. The dollar probably strong off of stronger numbers. Let's see if I'm right about that. Yep, better than expected in both camps, guys. PMI strong in manufacturing and in services. Looks a little like a rebound for the dollar, and actually very optimistic for my S&P 500 trade. Let's take a look at that. How are we doing on the S&P, my friend? We are still long, up about $66. We've recovered some of the movement here that what happened on the account overnight. Here we had some volatility on my S&P 500 trade. Went long a couple days back. We've seen some spikes both directions. Back to break even here on the S&P 500 trade that I have open inside of our group. Again, stronger than expected PMI numbers here today. Offering some strength, I think, for the indices, but also some strength for the dollar. Why does it make sense for the dollar? Well, because again, the dollar tends to rally in the face of strong economic numbers, which is kind of where we're at with that. So gold selling off here. Again, what we said about this earlier, the market is reacting exactly as expected. Guys, I had a whole gripe with a lot of times what people like to say is they like to say that the news reacts totally random. Good news causes things to go down and stuff like that. It's actually very, very accurate. Today's reaction is exactly the reason I knew the number was better than expected before I looked at it was because fundamentals make sense most of the time. And here's why. economic data coming out stronger than expected, PMI numbers coming out better than expected in both manufacturing and services, shows that the S&P 500, the fears of recession are big in the stock market world right now. Of course, stocks would take a dive in the case of a strong recession or a problematic recession. But then also the dollar becoming stronger than its counterparts in terms of investors may want to move into the dollar, buy bonds instead of buy European bonds or their counterparts in the UK, that sort of thing. So we're seeing all the natural responses. Same with gold, guys. Gold taking a bit of a pullback here, a sell-off, makes total sense. Economic strength tends to rule out some of the fear gauge and causes the sell-off in gold, right? Again, economic strength looking better than expected here today. Now, this is not a total, all in, okay, everything's good from here. We'll just go straight up on the stock market and straight down on gold. It's not quite that level, but the market is factoring in that economic decline is not nearly, in terms of PMI numbers, as pressing as it might have been expected here today. So things making sense again on this release. So yeah. News are late to structure, but spikes overall long-term structure shows direction. Yeah, well, news is, so a lot of times people get mixed up on what fundamentals are. Fundamentals is not the news spike. The news spike is just the reaction to the numbers. The trends that you guys see, like for example, people like to say like, oh, they don't need fundamentals because, they got all it from the technicals. Well, this trend, what you're seeing right here, that's a fundamental trend. It's so clearly a fundamental trend because the Federal Reserve rate hiking like crazy to deal with a very sticky and problematic inflation period in the United States, right? Caused a massive rally in the dollar. The number one performer of most major indices last year was the dollar, right? Now, in terms of this year, we're seeing sort of a opposite effect. Inflation is coming down. Economic strength is holding tight. The economy seems to be resilient enough here. And so the dollar is coming down. And that's why? Because again, Federal Reserve likely to stop rate hikes and potentially even cut rate hikes or cut rates starting next year. So something to think about, right? So my take on this is, as you look at the dollar, right? Dollar rallying here makes sense. The economic strength came in, showed some resilience for U.S. economy. And again, if we compare the numbers to what came out in the UK and Europe, right? We got two greens here and a red and a green. Which one's more green? This one, right? If we keep it really simple, the idea is PMI numbers came out stronger in the US here than expected by forecasts. Where does this leave us in terms of trade setups? I'm still long S&P 500. We'll see if I can hold on to this trade. My stop loss is underneath the lows. Let me pull up my trade here for you guys. So this is my my SPY trade. I'm long with a stop below structure. If this market does break lower, then of course I'll be out of this guy for a loss. But watching that one closely here. As long as we stay above structure, I'll continue to hold on to that S&P. And again, part of the reason here for maybe a bullish reaction in stocks is because, again, a lot of indices, stock traders, investors, they're concerned that a recession could really tank markets. But showing resilient numbers here this morning in terms of PMI is promising and causing, in my opinion, potentially a little bit of optimism in the stock world. So, yeah. Next week, we have some interesting stuff coming out. Of course, we have consumer confidence on Tuesday. In terms of GDP, we have advanced GDP coming out on Thursday next week. That'll be a big one. And also unemployment claims as well. This week, we got 245K came out recently. So we'll have to see what happens there. And then, of course, we also have the PCE number coming out on Friday of next week. All very, very important stuff if you're paying attention to the U.S., as that is what we focus heavily on my channel. But yeah, we're gonna now bring in Frank. Frank, what's going on? Can we let's see if Frank can join us. What's up, Frank?
Hey, how's it going?
Pretty good. Frank, what's your take on? Did you see the PMI numbers this morning?
I did see PMI. So I kind of take that as bullish for the dollar in this case. So more purchasing managers, more money spent. That's kind of showing some confidence in the market, and that's it. All kind of teeters on like what the Fed is trying to do. And more confidence means, okay, we can keep steady with the interest rates, or we can hike more, or we can focus on inflation more, versus letting inflation kind of run its course, and keep that soft landing in mind. But
Yep.
if we see any kind of positive economic news, is kind of bearish in this situation right now for like the stock market, but then it's bullish for the dollar because focusing on interest rates there.
My take on it, Frank, I of course agree in terms of the dollar. Looks real strong off of that bounce. But I don't know if you remember, well, you definitely remember a couple weeks back, we were talking about how strange it was that in some cases the dollar was rallying alongside the stock market. I think today it actually makes sense. Now, of course, the stock market is not necessarily super bullish on this, but possibly the reason, Frank, that we're seeing the dollar jump, but the S&P 500 kind of not do much, in my opinion, my take on it, it's not necessarily bullish for stocks, but it's not necessarily bearish either. Because again, what would be possibly way more bearish would be if economic recession was more likely. I think the stock market would be super panicky about that because, that concept of soft landing, we were talking about it this morning. I mentioned, and I want to talk to you about that gold concept that we were sharing earlier, because I think the audience would love that. This idea of the stock market potentially fearful about a recession, right? If recession is looming, then that's going to probably drag stocks down 10+%. But if we're able to somehow pull off some sort of soft landing where stocks don't crash, the economic numbers look okay, jobs remain stable enough, but the Federal Reserve gets that inflation problem sorted out, I think it's possible that might be the case for why we were sort of confused weeks ago with the S&P staying strong, but so with the dollar. Maybe a little bit of that resurfacing today with some economic strength, still showcasing, I would agree, strong for the dollar, but also neutral for stocks, I would say. That would be my take on it. So
no, I can agree with you to an extent in that point, but I also think that if you're focusing on the Fed and what they're trying to do, I tend to believe that the dollar is gonna kind of take the reins when it comes to certain economic figures. So
yeah,
anything right now looks, any kind of indicator that like the economy is going to improve is not going to be good for the stock market in the short term, at least. I mean, like we've seen the markets taking wild swings and then coming back to break even.
What might kind of be, this is a weird one, Frank, is almost like if economic numbers look okay, that's actually bullish for stocks. If stock market, it's like you say, if economic numbers look hot, that's actually bearish for stocks, because then it's like, oh, well, the Federal Reserve is just going to go, they got to raise rates more. And then so it's almost like neutral is the best. And then too bad is bad for stocks. Too good is bad for stocks. It's almost like you want sort of just like economy, don't go crazy anyway, just stay okay. And then things will continue to sort of normalize. Frank, I want to ask you, we are on a bit of a time crunch before we have our guests come on. In terms of gold, tell us about the inflation stuff we were talking about earlier, and maybe why is this gold chart such a sell-off here today? I think economic data coming out weak. What does that tell us about gold?
So historically, inflation and gold go hand in hand over the long term, but it also depends on the rate of inflation, like how quickly it's growing and declining based on, like a month-to-month basis. And so what I've tend to like come across is, as inflation rises, so does the price of gold. But then at the same time, it's also how quickly.
Right.
So it can hit, inflation can be at a certain peak and stay there, or even before it hits that peak, gold's price starts to, come down. And I think this might be that case where we're looking at a 2% inflation target, like coming into view. The rate slowing down, the distance between interest and inflation is getting closer and closer. So this is now a sort of a less bullish case for gold, even though inflation is still high.
Yeah, because you're kind of getting some economic strength coming in, which economic strength, of course, as we talked about this morning a little bit before the stream, we're talking about, stronger than expected inflation. Economic data points towards the gold fear train not being as strong, right? In 2020,
Right.
went parabolic, outpaced the stock market even because people were fearful of economic collapse. With economic numbers coming out stronger today, it somewhat makes sense that we see a little bit of a dive. Real quick, we need to take a quick break. We're going to hear from James from one of our sponsors of the show, and we'll be right back after this. James, take it away.
Thanks, Nick. Yeah, real quick, guys, I want to remind you that today's stream is sponsored by 8cap. 8cap is an award-winning regulated broker that gives traders a better trading experience. If you choose to trade with 8cap, you'll be able to trade CFDs like gold, Forex pairs, cryptos, indices, and more. Additionally, their spreads are razor thin. They offer up to a 500-to-1 leverage, and their customer support is top-notch. One very cool feature is that they've recently partnered up with TradingView.com, meaning that you can do all of your trading through 8cap directly on TradingView. So if you're a fan of the channel, 8cap has partnered up to offer the A1 community a free copy of the Edge Finder, that software tool that we were just talking about that is 40% off now, by the way. You can get it for free. You can get it 100% off if you deposit $1,000 or more into your personal trading account. So all you have to do is sign up with 8cap, create an account, put $1,000 into your trading account. Let us know when you've done that, and we will hook you up with the Edge Finder for free. 8cap is the best in the business, and that is why we are proud to be sponsored by them. You can find more in the links down in the description below. You can find out more about 8cap down there. Remember, if you want the Edge Finder for free, all you have to do is sign up with 8cap, deposit $1,000 or more into your personal trading account that you can then use and make trades with, and you'll be able to trade with the Edge Finder while you're using that $1,000 deposit. So thank you to 8cap. They are the best in the business. Again, link down in the description below to find out more about 8cap. Now, Nick, back to you.
Thanks, James, for that. And we are coming in to our next guest in just a moment. But before I do, I want to remind you guys, if you guys are regular viewers of the channel, James mentioned a little bit of our Edge Finder software. I haven't really talked about it today. I do want to say and make an announcement that we are doing our biggest sale of the year on this, and that sale is ending soon. So what I would like to let you guys do today, if you're interested in getting access to the Edge Finder, we're going to drop a link in the chat right now. And if you click this link, I want you guys to ask for a free trial. We're going to be handing out free trials today of the software, meaning all you have to do is click this link. It's going to open up a conversation where you can chat with one of our support reps. Click chat now and click Edge Finder Trading Software Access. And if you start a chat with one of us, what it's going to do is open up a live chat feature where you can ask your questions and get a free trial of our software tool from one of our staff members here at A1 Trading. So if you want access to the tool, if you want to try out our stuff, Frank and I are talking economic data, we're talking numbers, fundamentals, COT data. Get access to all the same tools that we are using today for free using the Edge Finder. And again, that link will take you to a conversation with one of our support reps to get your access to that today. So click that link and we'll have someone chat with you there. Frank, thank you for coming on. I think we're short on time. We got another guest joining us, but stick around for a minute. Let's invite Kenzo in and say hello to Kenzo, see what he's got for us. Hey, Kenzo, what's going on, man?
Hey there.
Hey, how are you, man?
Good. Frank and Kenzo meet each other. We're all three on the show today now.
Yeah,
Kenzo,
I'm very sorry. On my side, we actually have some blackouts. and it seems like it started just now. It's very dark here.
I was gonna
So
say I can barely see you. It's like the
yeah,
room
so
is dark.
since I use two screen, the other screen is off, so I don't know if I'm going to able to do that. But I will try and see if maybe I can able to share my screen.
Okay, we
Let me
can try
see.
pulling yours up and see if it works. If not, no worries. We'll figure something out.
Yes, because I don't think this will make. Let's see. Because if I share the screen, I'm sorry, if I share the screen, it's going to only share whatever that we see now, and I'm not going to switch between the two screens. So I don't know if now. I don't know. I don't really know what's really
Okay,
happening.
Kenzo, no worries.
So I think
We can
this is
let
gonna
you sort it
be.
out for a minute, and we'll bring you back in if you'd like to come back. Either ways, no worries. If you want to just message with Chandler about it and let him know, he can sort that out on the back end, and we'll bring you back in if you're ready. Okay.
Yes, I think maybe that will be cool. But the thing is, the power is gonna come back around in 2 hours. That will be very, very late.
Sure.
So I'm very, very sorry, guys.
No problem. No problem. It
Let's
happens.
just meet
Kenzo.
on the next Friday then.
Yeah, no problem. Thanks for coming on anyways, Kenzo. Have a great weekend, man. Yeah, so thank you, Kenzo, for he tried. He really tried to be on for us today, guys. I appreciate Kenzo. And you guys who know and love Kenzo will have to just catch him on the next stream. I guess, Frank, that gives us another minute to chat then.
Sure.
Continue on with what we were saying a little bit about gold. I know we got cut off there a little bit. We're taking a look at gold's price. We're selling off. Do you think this continues? Do you think we stay at these levels, or is this a bounce zone?
I think so. There's a lot of zones that it could bounce from, but my initial thought was that it would come back up to test like the 2060s, 2070s, where it has hit in weeks back in like 2022, and then the highs in 2020. But now, because of what's going on, like the economic data, this is a big zone that it just broke. So it doesn't look as bullish as it did, earlier on in the week.
I think one case to be made, and this is my opinion, Frank, is I'm not buying this dip here on gold, despite it being, it's a good dip, and I still think overall things look okay for a gold rally. We still have very high inflation levels. There's still a lot of concern about potential recessions. Again, recession fears are a little bit down this morning with this, and probably one of the weights on gold right now. But if things sort of start to bounce, if they start to show signs, for those of you who are newer to the stream, Frank and I, we like to trade things that are kind of in momentum. And so with this falling down here and holding resistance very well, I'm kind of with you, Frank. I'm not necessarily jumping to buy gold at these levels. I bought gold recently when it was sort of in this upward momentum, but it seems to have sort of fallen. It's lost its shine, for lack of a better phrase. So yeah, it's a little meme for a little dumb joke for everybody's morning. I'm kind of with you on gold, Frank. If we can get a rally going, then perhaps looking for breaks and retests kind of concept. But right now, can't seem to find a bottom for gold, and I don't necessarily. I'm not jumping to buy around this 1974 mark.
That joke definitely went over my head at first, but that's
it went over your head and it came back and hit you in the back of the head later.
That's right. But it's kind of funny though, because you're seeing like similar behavior with the dollar and the stock market. So
get that dollar go, man. That's crazy.
Yeah, the dollar's really taking off because of this. And the reason why I say that with the stock market is that it almost digests this information just as quickly as it moves on very quickly. So not that I can't say I'm bullish or bearish on the stock market, but right now it's just looking like dollar strength in general.
Yeah.
And like I said, like the economic data that's coming out, that's pointing towards positive news is ultimately good, in my opinion, for things like the dollar and keeping like incentive out of the stock market. It's you kind of have to score them separately, I would say, but
Yeah,
good economic news.
not always a one-to-one perfect
Right.
inverse correlation. So yeah, and it's interesting too. I mean, just based off the reaction that we're getting on gold, we've got dollar on the left, gold on the right. What this shows, Frank, is that the economic data here might be leaning more towards what we first talked about when talking about the indices. Too hot economic numbers show stubborn inflation and maybe a more hawkish Federal Reserve. Seems like that's kind of where we're at today. Like leaning towards, clearly the dollar reaction is really strong. The gold reaction is a heavy sell, which again, economic strength, usually a bearish reading for gold in many cases. So, I think for gold traders out there and for dollar traders out there, this is a clear catalyst in the short term. I would say, and this is my take on this, Frank, is that if you're watching the dollar, a break above this resistance, which has been stubborn pretty much all week, would be a notable zone. So if we're able to break like 102.2, let's call it, any pullbacks into that zone could lean towards a bullish week next week for the dollar. So we'll have to watch that and see. Would you agree that's
Right.
our key zone?
Yes, but at the same time, you need to look at just sort of the price action and like swings overall. A higher high doesn't necessarily mean confirmation right now.
Sure.
In a lot of these markets, a higher high means the high for some time, and then it might even establish, a lower level. And what it kind of comes down to is what I've noticed is just looking at COT. Like, what are they trying to do? COT kind of scaled out of gold this week, or from last Friday's report. It showed a lessening of positions to the long side and to the short side, but it's showing like a lack of interest, and I think it's more so them being cautious. So looking at that, and then looking at the trend this week has been overall down. Oil, on the other hand, it's doing the same thing, but it's also gaining interest on the long side. So it's not like, it's also not a one-to-one that it's going to go up when they buy, but at least that smart money is buying into this fall. Whereas in the stock market, it's the same thing, I think, as gold. They're getting out of longs and short contracts overall. They're just, or they're barely touching it. So it's a lack of interest overall.
Yeah, no, that's fair points. And if we have to pick where the biggest long change was, it was a bigger shrink in longs than it was in shorts. So, I'm very curious to see what next week did. Is Friday. So we're getting the COT data tonight. For those of you guys who have Edgefinder access, the Edgefinder updates its COT reports once a week, usually on Friday evenings. So if you guys already have access to it, the Edgefinder will have data for you, the up-to-date stuff here tonight or tomorrow. So if you do not have it, it is the perfect time if you are interested in COT data. In case you don't know what COT data is, it is essentially a way to track what smart money, hedge funds, speculators with large pocketbooks, what are they buying? What are they selling? And we generally assume that, they know a little bit more than the average person, that's for sure. So always interested to see what the COT data holds for us. Saman in the chat, thank you very much for the donation to the stream. I appreciate you. That is absolutely awesome for supporting our show here. We really appreciate that. Shout out to Saman in the chat. If you guys, and then Kara also has a question, when does COT data get updated in the Edgefinder? So what it does is specifically pulls the data once a week, and it pulls, and again, this is because the COT data only comes out once a week, pulls the data once a week, each Friday evening. And if it doesn't work on Friday, then it shoots to try and do it on Saturday. And if it doesn't work on Saturday, it does it on Sunday. Sometimes there's a delay in the report. That's why we built that software to be a little bit smarter in that regards. Frank, thank you for coming on the show. As always, man, your commentary is, we've got a bunch of people in the comments. I think you're going to overthrow the channel pretty soon. So maybe I'll be watching your show soon.
Yeah, hopefully not.
Thanks for coming on, Frank. We'll see you next time.
Bye.
Cool. So yes, guys, Frank in the room as always, popular commentator. He's one of our analysts here at A1 Trading and one of the head developers on the Edge Finder. Speaking of Edge Finder, we'll mention it one more time because the sale is ending. We are doing our biggest sale price of the entire year. Do not miss it. If you miss it, we can't extend it for you. So do not miss the sale price. If you want access to it, send us a direct message right here. Click this link. It's going to open up a chat with one of our support reps here at A1 Trading who can get you access for the best price of the entire year to our smart money tracker, all of our economic data that we track and pull, our seasonal trends, and all of the biases that Frank and I use to help guide our trades within our Discord channel. By the way, also, you can get access to the Discord channel as well, which includes all the trades that Frank and I are taking, why we're taking them, our analysis. If you're lost and you don't know what you're doing in this stuff, come join our Discord, get access to that, and you can learn along with us and join the conversation that's going on there. Guys, have a great rest of your day. Thank you for coming on the stream, and we will see you back on the next one. Have a great day.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, if you open a $1,000 or more trading account with 8cap, you'll receive a free copy of the Edge Finder. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.